Hello traders, how have you been?
Well, I hope that you've been better than how the Nifty has been behaving for the last couple of weeks. Last week we had a bounce back. A couple of weeks back we had a correction and the index was on the verge of a breakdown. Then all of a sudden the short-term trend reversed. So what we're dealing with is an index which is not very sure which way it wants to go for the next, let's say, at least a quarter, which brings a lot of choppiness, volatility, ambiguity in terms of the underlying trend, and that makes life for a short-term trader difficult. So we do this every weekend. We'll take a look at the Nifty, the various sectoral charts. Last week we could not take a look at RRG, but this week we're going to do that. Let's try and make sense. What can we expect the week ahead? Come, let's take a look at Nifty.
Okay, so here we are, our usual template. 3 time frames, monthly on the left, weekly the center one, and the daily time frame on the right hand side. All of them have the same readings in terms of the indicators. We have the next price indicator with the state of flow and the next RSI. The monthly chart we had included last month when it finished, August 2025. And its relevance will pop up later once we come to the close of September. So we'll just observe it on the left-hand side. We're not going to comment more on the monthly chart right now. It just doesn't make sense. Come to the weekly. And the first thing that stands out is the fact that this particular 24,400 kind of range is holding so far so good. No problem, no complaints. The state of flow is negative. My trend indicator is negative. My momentum indicator is negative, which means that most of the markers, most of the parameters, variables are on the negative side. I also happen to have an inside bar even on the Heikin-Ashi. I can see that. If I change this Heikin-Ashi to bar chart, what I see is just 2 weeks back it was a sharp correction, closed at the lowest point of the week, finished the week with a lot of pessimism, and what I see the very next week is a bounce back. It did as much as it could to reach the previous week's high, could not, slipped quite a bit, and more or less closed at a 50% of the week's range. So this same bounce back on the daily time frame has led to this rally, short-term rally, which has reversed the short-term trend and the momentum indicator. My state of flow is yet to go positive on the daily time frame. And if I zoom out a little bit, you might start to notice or observe what we know in terms of patterns, like a double bottom kind of a behavior. If you ask me, I don't think it's a double bottom at all, though it looks like one. But one thing is for sure. I would say a couple of things are for sure. Thing number one, which is very, very obvious, is the existence of supports holding the market at 24,400, round about there. It has enough historical evidences, and so this makes this 24,400, 50 points plus minus extremely important. When I get these kind of extremely important levels, the make, that is, if it holds on to it, is important, and even if it breaks, can lead to significant downsides also. It's an important level. It's a crucial, critical zone. Now, if I take a look at the daily, what do I see is swings, sharp swings on the downside as well as on the upside for close to last 5 weeks, which means that the short-term trend from the daily chart has become extremely short-lived. It's turning around very quickly, which makes, of course, for a short-term trader very difficult, because by the time the trend reverses, it's time to, go on the other side. What's the situation at the current juncture? The current juncture, if I take a look at the momentum indicator, has improved. All right. Trend kind of improving. Okay. And I have a red HAGB, which is a sign of consolidation. From a bullish perspective, from a long trade perspective point of view, first level is Friday's high. I need to see the market going above Friday's high. And another level is the weekly high. If the weekly high is crossed, then I can expect further upsides. Till then, it will be difficult to take a call.
What about on the downside? From the downside point of view, of course, it is this 24,400. This is the most crucial zone. But if I break it down in two parts, Friday's range, of course, will be important. See, the why I'm giving Friday's range importance is because Friday, in terms of my Heiken Ashi analysis and understanding, is a bar of consolidation after this recent bounce back. So are you consolidating, gather some steam, momentum for the fresh movement on the upside? Or is this move over, done with, and you're going to reverse and it's going to open up a 1, 2, 3 kind of a multiple legs on the downside? And that's why for Monday, the important levels are going to be Friday's range. And the next level beyond Friday's range is the last week's range. So these are the two levels on the higher side and the lower side that you should keep an eye on. If you ask me, my view, my bias is completely split right through the center. My readings from the weekly are predominantly negative. The readings from the daily are very naive, they are not naive, very nascent and short-term positive. So we are at a juncture whether it will be interesting to see whether the weakness from the weekly will be too much for the daily to turn around or vice versa. So keep yourself, do not create any strong bias on the positive side or on the negative side, and watch out for either direction. What is the best case situation? I think the best case situation for any trader is clarity in terms of the direction, and hopefully the directional movement is with as less volatility and choppiness as possible. And so for that, I would like to see a breakout or a move beyond the high or the low and to sustain rather than, you just break out and slip and break down and bounce back. That choppiness makes life difficult. So strategy view on the Nifty is there's no particular view. We have a couple of levels, Friday's range and last week's range, beyond which we will start to get some clarity. That's the Nifty. Taking a look at the mid-cap and the small cap, the broader markets, you will see that the CNX mid-cap as well as the CNX small cap index, both of them, the view that comes out from these charts are very, very similar to that of the Nifty. It seems like TradingView is taking a little bit of more time to open up the charts as I click on to the mid cap and the small cap. Whenever you face such an issue, if you are a user of TradingView, you might face such issues. One thing that has worked for me is a hard refresh, which you can do a Control R or a Command R on your operating system, and it kind of hard refreshes that particular page. I've not done that yet, but it's trying to open up. This is a small cap index, and as you can see, a bounce back week after the previous week's fall. Markers on the weekly chart are negative. Markers on the daily chart are primarily positive. And this daily chart also gives me a bit of a structural positive divergence. So the small cap is giving me hope of a bounce back. Level wise, I'll stick to the same thing, last week's range. Hopefully the mid cap index chart will open up quicker than the small cap. Yes, it does. Good for us. Weekly charts, the same thing. Markers are negative. Now, when I say markers, I mean when I'm reading the trend, momentum, pattern, anything like that. So weekly charts are negative, range bound, inside bar. Daily charts are short-term positive, contraction bar. Not a very good looking divergence like we saw in small cap, but nevertheless, what the small cap and the mid cap charts are trying to tell us that, listen, we have bounced back and we have retraced a little bit. And this is the time, the platform, the foundation for the next leg up. If it doesn't come, if it fails, then it will be difficult, then it will start to slip. So I feel so that going forward, the next week or at max couple of weeks, next 2 weeks, should be an important one, out of which both of us should get some directional clarity. As of now, kuch bhi ho sakta, anything can happen. With that thought in mind, let's take a look at the sectoral charts, right? Last week, we tried the RRG graphs using the strike analytics. Today, I've not wasted much time. I've already opened our sectors, kept the benchmark Nifty 500, weekly time frame, 13 or 14 weeks,
and I'm kind of ready with the RRG graphs. Last week it did not open for whatever reason. So how are they playing out? If I sort it in terms of percentage change, I can see that the Nifty Auto has been the biggest gainer over the last 13 weeks. And there are only two names which are in the leading quadrant. That's the Nifty Auto and Metal. Now, if you follow my end of the week analysis like this, do let me know if you like this work or not. And if you want to subscribe, you can do that as well. That will give me a little bit of motivation to keep on doing this work. Nevertheless, what I was trying to say is, if you have been following my end of the week videos, then you would have noticed that, let's say, a quarter back or even a month and a half back, the number of names which were in the leading quadrant were much higher than just two names. And you can see the shift. How many stocks, how many sectors were there in the leading and how many sectors were there in the lagging or the weakening? So can you see that the greens have kind of shortened and the lagging list has increased, right? It gives us a sense of what's happening in the underlying, the undercurrent of the market. Things are weakening continuously. Okay, so who's up there? Nifty Auto is up there and Nifty Metal is also up there. Nifty Auto, exceptionally good looking RRG graph. You can't expect anything better than this. Beautiful left to right, down to up, leading quadrant, wonderful. We'll also quickly take a look at Nifty Metal. Nifty Metal, equally not so wonderful in terms of RRG graph. It's very close to the axis. It does not have much relative strength. It did a lot of things recently. It does not have clarity what it wants to do when we are reading the relative strength analysis. At times it's gaining, it's giving back very quickly, trying to bounce back, and a lot of things are happening. So the amount of clarity we had with Nifty Auto, very strong. Same clarity we do not get from Nifty Metal. However, having said that, end of the day, it is within the leading quadrant, which means that when we take a look at the sectoral charts, we should be looking for signs of strength. Now, signs of strength from Nifty Auto, CNX Auto is obvious. We've been talking about it for quite some time. We got that breakout, gap up, consolidation, fresh 5.5% move. The GST restructuring definitely has helped this sector and I think will continue to help it. And it seems like this is one sector which is headed towards an all-time high sometime soon. But after 5.5%, after a gap up like this, does it make sense to chase? I would not. So view is bullish. Do not chase. Look for meaningful corrections, short-term retracements as opportunities to go long. That's auto. So we keep the flag green. We had kept it, I think, last week green. We're keeping it green. Now let's take a look at the metal. Now metal CNX metal index is an interesting one because as far as I remember, this is one sector which has been particularly very choppy and had created a diamond kind of a shape and all that. So first thing is the weekly behavior. One long green bar, big move. Just right before that, it had been particularly very choppy. And God knows what kind of a pattern is this. I have no clue. It reminds me of those, if you've ever played Monopoly in your childhood, or even I still play with my kids. You get those houses, those hotels and houses that you build on that particular avenue or street. It essentially looks like this with a chimney on top. Nevertheless, tough times. It has gone through tough price behavior, higher highs, higher lows, सब कुछ था इसके अंदर. Bhayankar volatility, choppiness, and now it has managed to give us a move. How good is this move? Pretty good from the daily chart point of view, decent from the weekly chart point of view. Monthly also it seems okay. So view क्या होना चाहिए? Definitely the view should be bullish. You should look for pullbacks and corrections to go long. Especially keep an eye on the ferrous stocks as well. So these two names which are there in the RRG graph, when we did take a look at their individual charts, the individual charts are also giving us bullishness. So fine, no problem. Let's come to the weakening quadrant, and this is where you have the PSU, midcap and the small cap. Midcap, small cap, we have already taken a look at it and we have discussed. They have come down. They have opened a window of opportunity for a revival.
If they can't at this juncture, then they will fail, which means that the loss of momentum of relative strength may continue further. That's the small cap and the mid cap. The other one is the PSU Bank. PSU Bank was doing relatively better a month back. But for the last month, I think it has lost the edge that it was enjoying in relation to the private banks. And so this guy is also slipping. See, I've been talking about the fact that Bank Nifty, private bank, finance, and all those names have been the pain point and they are weak. PSU Bank was holding on to those relative strength, but off late it has started to slip. So let's take a look at the PSU Bank index. Number one, in terms of the weekly chart, we do see a pretty decent range, and I'll change my weekly chart to high Kamashi. It will give me a little bit more clarity. And I'll take a little bit of few minutes from you in these videos to mark some important levels whenever I find them on any chart. This is one such level. On the weekly, it's back to a zone from where it has bounced back. Trend indicator is angling down. Momentum indicator is down. I do not have any state of flow as of now. And the daily chart clearly shows and reflects how well it has bounced back. But trend is down. Momentum is down. State of flow is also down. And it's not looking that good. It's very likely to go for a retest of the range. I don't know whether it's going to break down or not, or whether it's going to reverse. But when I combine majority of my readings, it's down. It's negative. Now that we're talking about PSU Bank, it makes sense that quickly let's take a look at the private bank, because private bank's behavior is what essentially moves the Bank Nifty. And it has already fallen quite a bit. It has broken below its early August lows convincingly. Nifty abhi bhi iske upar hai. Right? So this is one pocket of weakness, the private bank. But it's fallen also quite a bit. And is there any kind of range or polarity that I can draw or keep it drawn on the chart, something like that? Well, I can think of something like this. I can drop in something like this. But when I take a look at the daily chart, I don't see anything convincing. A little bit of nudge of improvement from the momentum. Trend is still down. Very early signs of selling slowdown. Is it enough for a reversal, bounce back? Not enough. Kab hoga enough? Last Friday ke high ke upar, if it goes up and sustains, then yes. And of course, weekly high ke upar. But because it is an underperformer, because it has dragged the index down, it's not going to be easy for it to bounce. But if I consider the polarity, if I consider the monthly charts polarity, this range is not a bad range from where it can bounce. I now need to see the evidence of the bounce. Okay, that's the private bank, and that will essentially give the same view for the Bank Nifty, because Bank Nifty is very, very private bank heavy. And the Bank Nifty, as the chart is slowly opening up, I think some issues with trading views or maybe my Wi-Fi, which is very unlikely. I'll check that, but hopefully it will not make this particular video, longer. So you have this particular range of polarity on the weekly. State of flow is negative. Everything is negative. A bit of an improvement in terms of the Heiken and momentum. Not enough. Stick to last Friday's range. Stick to last week's range. The same thing that we discussed on Nifty. Stick to that. Find those sectors and stocks. Let's say when Monday finishes. Which sectors, which stock? Did it move above Friday's high and closed above it? Did it move below Friday's low and closed below that or not? That will give you where your pockets of strength and weakness lies. And once the week finishes, the next week ends, then you check which sector or stock did it go above last week's high and closed above last week's high. That's important, and vice versa. So Bank Nifty, private banks, still very much weak, which means that we can also add on the CNX Finance with this stock so that we can club them and take a view out of it. As the chart opens up here, I'm going to quickly go back to my RRG graphs, gain some time as the chart opens slowly there. And you see that financial services are weak in the lagging quadrant. Bank Nifty is weak in the lagging quadrant. And the Nifty private bank is also very much weak in the lagging. So in terms of relative strength, they are all weak. In terms of charts, they are also all weak. They are giving us a little bit of sign of maybe some improvement, but we cannot confirm that. And that's why I have kept them more or less all marked negative. PSU Bank is at support, and I think I will mark this also negative. Makes sense. Let's go back to the RRG graph and let's quickly take a look at who else is there in the lagging quadrant. We have energy, we have public sector enterprise, PSE, and the Nifty realty. Energy enjoys some weightage after IT, and energy's RRG graph is also very much weak. Public sector enterprise also very much weak. Beautiful behavior like a clockwise typical RRG behavior. And Nifty realty has been underperforming, and a very nice clean RRG clockwise movement on the downside. So all of these three, public sector enterprise, realty, and energy, has been on the downside. Let's come to the actual chart. CNX energy. Good. The charts are not taking that much time now to open up. Weekly, some bit of a green HHGB, which is a sign of consolidation. Last week's low is extremely important for further weakness, and last week's high is very important for any kind of a meaningful bounce back. A bit of an improvement of momentum in the daily, a bit of an improvement in the daily trend. Short-term trend all of a sudden has reversed. And going forward, Friday's high and weekly high breakout, if that happens, this sector, this pack will start to look relatively better. Or else, if the weekly lows are broken, it's gone. It's going to lose it. So I'm not going to flag it green or red. Observe it based on Friday's range at least. Realty, weak, clearly weak on the weekly charts. Trying to find some range, some kind of a support on the daily. Some signs of divergence, maybe, but I can't confirm. Weak. This is weak. Let's keep it red. And then the CNX public sector enterprise, PAC, weekly chart, a bit of a bounce back, just like energy. Very, very similar to the energy chart. And make or break. So it's Kobe. Let's not flag it off. Let's see how it behaves. Which leaves us to the last quadrant, which is the improving. And this is where I have consumer durables, FMCG, pharma, and IT. Out of these three names, it's the consumer durables which is looking beautiful. FMCG is also behaving pretty well. But now we will take a look at the individual respective charts, and you will see that the consumer durables has given you a fantastic breakout. And the breakout has sustained. It's cooling off, trend, momentum, state of flow positive on the daily, on the weekly. It's a positive chart. It's a positive structure. Look for buying opportunity, especially when it retraces. That's like clear green, and we did mark it, I think, for the last couple of weeks. FMCG, on the other hand, could not sustain to its weekly high. Where did it go and where did it close? It has significantly slipped. This was the breakout zone. It went up here, but it closed and slipped below. This is not a very good sign, but if I check the markers, trend, momentum, state of flow, most of them are positive. So there's no particular rationale or reason for me to sound negative on FMCG. So FMCG, I'm going to stay positive, but I need to be a little careful. Consumer durables is far more stable, much more better if you ask me by looking at the price charts. Which leaves me with the last two RRG graphs, which is pharma, looking clean, good, and IT looking not so good. It is significantly away from the axis. It means it does not have relative strength. It's kind of losing a bit of momentum. Pharma and IT. Let's take a look at IT because IT enjoys a very good weightage after the banks and financials. Weekly chart, trend, state of flow, momentum, negative, Heiken, nothing, close almost near the week's range, so negative. Daily also very much negative. There's nothing on the daily and the weekly based on which I can at least comment kuch ho sakta hai, maybe it can bounce back. See, we did take a look at energy, we did take a look at the CNX small cap, we did take a look at the public sector enterprise, and there is a bit of element that there is a chance of a revival. Yahan pe wo hai nahi, it's not there. So this is a weak chart. It is back to the previous lows. And whether are we going and headed for a breakdown, that next week's trade will tell us.
What should we flag it? We should flag it negative. And then pharma. Pharma's weekly chart is trend-wise flattish, momentum-wise negative, state of flow. There's no clarity in terms of direction. We can understand this sell-off was very, very sharp. Decent bounce back, sharp retracement. Again, it's trying, so it's little crazy, a little choppy. And so my weekly readings are neutral. My daily readings are also kind of neutral. So I'm not flagging it off. Maybe you're going to see stock-specific behavior on either direction. So pharma, I'm not going to mark anything, not flag anything, and keep it aside. Apart from these sectors, there are 4 more names which we have added to our list. It's not there in the RRG list. Nifty Capital Market, weekly chart, not good. Daily chart, bounce back mode. Most of the readings, not good. Stay away, negative. Nifty India Defense, weekly chart, most of the markers negative. Daily, a falling kind of a consolidation. A bit of an improvement here, but price-wise, no. Long-only traders, stay away. Wait for the selling to conclude. Digital, weekly chart, not bad. Okay, 60-40, 60% chance it will pick up if it breaks out. Daily, flattish, not much clarity. So based on the weekly, we can expect a breakout. But Nifty India Digital, if you take a look at the constituents, after the first 2-3 names, the IT stocks comes into the picture, and IT is not positive at all. So it will be interesting. So I think we can unflag it and just observe which way is it breaking out. If we get this breakout above the high, that will be very good for this particular sector. Let's see, next weekend we might get some clarity. Which brings me to the end of this list, and tourism, the sector which is the closest to its all-time high. Weekly, flattish, there's a slant divergence, trend is flattish, momentum is down. Short-term trend improvement, momentum, mild improvement, tough, not easy. If you take a look at the daily chart, you will find some kind of a coil, consolidation, symmetrical, triangular formation, whichever way it can break out. Take a look at the top stocks. Indigo is there. Indian Hotel is there. And their individual chart formation can give you some clarity. Because it has a lot of relative strength. It's close to its all-time highs. I'm marking it green, positive, and let's see whether we get a breakout or not. Right? So that's more or less the final view on all the sectors. And it's kind of divided. We have few sectors which are green, which are positive. But out of that, auto should get tired. Cannot expect every week auto to perform. Plus, it does not enjoy a great weightage. Who enjoys a great weightage? Bank Nifty, IT, private banks, PSU banks, finance. And they're mostly red, on the verge of a bounce back. It's very important to see on Monday whether we get a follow-through move on the upside and close above Friday's high. As I shared with you earlier, what we should keep in mind are Friday's range and last week's range. That is going to give us some clarity. I think so that the market will stay stock selective and it will be choppy. It's not going to be that easy. So if you are a trader, please stick to your risk management. Please stick to your discipline. Decide your trades with a little bit of extra homework, right? Make sure that you have enough conviction and then go with the trade. Okay. Till then, let's prepare well for the week ahead. Do let me know what are your thoughts about the markets and about these videos. Take care. Goodbye, everyone.